Hello, this is Coach Mike from winningstockcoach.com. I'm going to start with my market overview video. The market overview for the week ahead, the week beginning December 22nd, 2014. Just a quick reminder, it is a holiday week for the observance of the Christmas holiday. Markets will be open full days Monday and Tuesday, a half a day on Wednesday, closed on Thursday, and a full trading day on Friday. Going to start out here with the SPX chart. This is the S&P 500. We talked last week that even though we had just a little late, like literally in the last 10 minutes, slip below the prior weekly swing high point, that the other indices held that weekly swing high point and that we would have to look for positive or negative movement. Well, as you can see from the weekly candle, we got that, but we didn't make a new high. We didn't close above the 2075.37 prior weekly high swing point, and we still have that 2102 target point that we've talked about now for several weeks. I do want to say that as we watch the upcoming week, we want to, at this point, observe what the proper risk and reward would be. And until we break that 2075.37 area so that we can use that prior weekly swing high point as our support, we need to observe that we're not quite there and could have limited up move until getting there. So we want to allow a little bit of that up move to see if we could get that, because otherwise we could just double top here and come all the way back down to our new support point, which is the close of 2 weeks ago, 2002.33. So as we're looking at that, we also have to look at now the movement that we made. We got a visible up move, a visible down move, and if we were to continue upwards, we might, if we get through that 2102 target, make a momentous move up to this 2230.95. Now I know that's hard to imagine because, wow, these markets just keep running and at some point they've got to fall. But you know what? People have been saying that for years, at least a good solid year or two now. And what we do have to observe is the possibility that it could happen because it continues to happen. So we want to let it get above our weekly swing high point from a few weeks ago, 2075.37. Let that little bit of an up move happen. And if it does, we're going to use that as our support for an upwards move. If we don't get it, understand that we could pull back on the technical pattern called a double top. That would mean instead of one time it couldn't break a point, it'd be two times, which would kind of add to the bearishness. And we would then look at a first target being 2002.33, and then probably down into like the 1890s, 1880s area for the short trades once that low point is broken. Over now to the DJIA chart. This is the Dow Jones Industrial Average. We talked last week about how we closed right at that weekly swing high point, and we would watch our weekly candle, not the daily candles. We specifically mentioned the weekly candle for a close above or below to indicate whether we were going to pull down to 16,495.67 or move upwards to a new potential target area. Well, as our low was established during the week, our targeting system allowed us to pick a new target. And what we want to do, very similar to the S&P 500, at this point, because of where we're at, closer to, we want to allow the Dow to break above the weekly high swing point of 17,958.79, so we can use that as our support point to move forward up to the potential of the area of 19,203.66. These are just close estimate areas, but they're areas that we regularly see hit. If you've watched the last few market overview videos, this pullback right here actually happened from an exact target point we had on the chart. It's not there anymore because it was hit. So we had to erase it and move on and retarget. So at this point in time, without a move above this prior weekly swing high, we have our support point, the close of week before last, 17,280.83 is our support. And as you see with just the demonstration of these two lines, horizontal lines, we're closer to the resistance than we are the support. So we'd have to allow the resistance to break before we make new long entries and move forward. On now to the RUT. This is the Russell 2000, the small cap index. And, for several weeks now, we've been talking about how this is just so boring. It's consolidating. And then last week, we got a little bit of a down pop, but it didn't break that prior low. So we had to wait for a new weekly candle. And what did we get? A weekly candle that did break the high. But we're almost to what was actually a double top before and could be a triple top. So again, the consistent saying here, we want to wait till we break that weekly swing high point of 1208.15 so that we could then look at a momentum trade to the long side that might take us up to this 1285.80. But the important thing to understand is it's already pulled back from this point twice. It's already not been able to break it twice. So wait for it to break it, because should it break it, the momentum trade will probably have very high volume and go quite fast. And it's worth letting that happen, as opposed to, well, maybe I'll try to get in right now, and then you hit it and you pull back from it going, oh darn, another loss. Wait until the confirmation's made that makes your probability of a winning trade much higher. Finally, now over to the NDX. This is the NASDAQ 100. And very, very similar. Last week, we talked about the support of the weekly high swing point, and you see the wick of this candle came right down, tapped off of it, and up she went. Well, again, you do want to break that prior weekly swing high. That's 43.3778. We did come a little bit shy of our last target at 44.0503, so we'd still have to put that into consideration as a possible point that it hits and pulls back from. But once we get above that, our new target point would be right here, 47.3596. Now, you've heard me in this video talk about the weekly swing high points and how they've served as support, and we need to watch them. The NDX chart, this weekly chart, is a perfect example of that. You know, even though that October pullback we had was a bit excessive by most people's view, if you actually look at the run that led into that October pullback, it was a bit more excessive, which means it needed a larger pullback. But I want to start right back here. My weekly, this is just a 3-year weekly chart, and this is what I'm using. If you actually look at this swing point here from the week of 9/17/2012, after you pulled back, you made a run, you popped above that weekly high swing point. And when you came down right here, look what you held, the weekly swing high. Right here again, when you broke the weekly swing high on this point, even though the next week was a red week, look what it held, the weekly swing high point. Again, even right here, when you establish a new swing high, it made a pop above it. For 5 weeks, you held the weekly swing high point. When you broke it again here, you came above, had a little wick here, but the close of the week held the weekly swing high point. Right over here, you made the break, and you came into that October pullback. And where did it pull back to with the hammer candle, as it's called? The wick came right down to the weekly swing high point. Again, we broke the weekly swing high point for the momentum trade right here. And where did we pull back to? The weekly swing high point. Now, people say over and over and over again that, you know, they don't know why the market keeps running, and they can't find value in it, and no reason to go long. This right here is reason to go long, because it's happened consistently over and over and over again. So if you don't get it because you don't trust the pullback when it's hitting the weekly swing high point, get it when it breaks it, because every time it's broken, it's held that point. And eventually that will end. Don't get me wrong. Eventually that will not hold true. But because it's held true each of these times that I just walked you through on this chart, you have to trust that it will, or you'll never get to take advantage of the moves it made. You'll simply be the one watching saying, I just can't believe that it's up this high. I can't believe it's doing this. And it'll continue to do it. And again, eventually that series and that cycle will end. But until it does, you have to trade each one of the opportunities, because each time, if you bought it on the break, if you went long on the break of the weekly swing high point and used that as your stop, understand that you won't be holding a big risk. Because if you actually manage your stop, if your plan said if it drops below there, I sell my positions in NASDAQ 100 stocks, it's not like the loss is going to be anything you can't stomach. It'd be very mediocre. So allow it to break the weekly high swing point, then use it as your support. And if you get up to your target area and start to pull back, make your sell, wait for the retest of the weekly swing high point, and rinse and repeat, do it over and over and over again. And the reason you have to do it is because each of these times I've just demonstrated it's held true. And either you're going to continue to miss great opportunities because you're trying to trade what you think and not what is actually happening, or you follow this advice and you make the kind of money we're making over at the Coaches Roster, and you stay pleased about it. We short stuff all the time, but we're shorting in observance of the consistency we see. We know when to exit and go long and take profits on those longs. And we know to do that simply with the tool that we provide here, this market overview video each week, because it truly is the greatest tool and greatest indicator to assist you in making any trade that you might make. Because one thing that you'll find over and over and over again is that when your indices pull back in October, late September into mid-October, when the indices pulled back, most stocks pulled back. And back here in March, when the indices pulled back, most of the stocks pulled back. Because no matter what you read about your stock or this, that, and the other, or no matter what your debate could be about why are stocks trading like commodities and sector-based momentum and based on the indices, it shouldn't be like that. They should be trading on their own fundamentals. That debate's irrelevant, because why they do or why they should or shouldn't has nothing to do with the fact that they are. And that's what you have to focus on if you want to be successful. This is Coach Mike from winningstockcoach.com, wishing you the best of luck in the upcoming trading week and wanting to wish you a very Merry Christmas. Now, I don't mean to offend anybody who doesn't celebrate or doesn't practice the Christian religion that I do, or doesn't celebrate Christmas. But in my respect for your religion, I ask that you still respect and don't hold offense to the statement I made, simply because it is, in my religion, basically the pinnacle holiday. It's the day that we celebrate the birth of our Lord and Savior, Jesus Christ. And with my respect to the freedom of your religion and the respect to the religion you practice, I also ask you to offer the same respect to me in my wishes and blessings for everybody watching this video, that may God bless them in this upcoming week. May they enjoy the time of the holiday, and may they really enjoy the true meaning of Christmas in that true gift that we are given, which is the opportunity to allow Jesus Christ to cleanse our hearts, to forgive us for the wrongs we've done, and allow us an opportunity to spend eternity in the kingdom of heaven. God bless you all.